let's put the spotlight on Muthoot Microfinance then, because it's the RBI that has been taking some of the steps to improve the liquidity in the system. But what does it mean for the sector and the company? Let's understand from Sadaf Sayeed, who is the CEO of Muthoot Microfinance. Hi, good morning. Good to be speaking with you. First up, help us understand that how does the risk weightage reduction helps the microfinance industry and how much liquidity will improve? What's your take on this?
Yeah, good morning. Thank you for having me here. I think the risk rate reduction is a very positive move from RBI. There are like direct implications of it and also an indirect implication. So first of all, when the risk weights were increased in November, microfinance assets were kept out of it. So there was no direct impact on the microfinance activity at that time. And so the reduction of the risk rate would also not have a direct impact, though it has significant indirect impact on the microfinance business, because I think the most important thing that it deals with is the perception with the unsecured asset. So when the risk weights have reduced, that it indicates that the perception towards the unsecured lending business has improved, and definitely the asset quality will also likely to improve. So that's one part of it. Apart from that, the allocation of capital because of the higher risk weightage, the 25% higher risk weightage, drew around 40,000 crores of capital of the banks. So which of course had an impact on further lending. So if you read the recent article or recent information from ex-Deputy Governor Mr. Mudrat, so it was almost an impact of 40,000 crores of capital allocation, and which translate to around $4 trillion dollars of lending, 4 trillion rupees of lending. So it's a significant impact. So definitely the liquidity will improve. There would be more funds available. And the impact of the capital allocation was also having an impact on the cost of borrowing. So the banks had to allocate more capital, which made their kind of margins thinner. So that's why there was a higher kind of cost of capital for the borrowers. So the positive aspect is, one, the liquidity would be available. Almost 4 lakh crores of liquidity will get infused into the system. Secondly, the pricing will come down because additional risk weights are not required. And third and most important is, it corrects the perception of higher risk in unsecured assets.
Sure. So Sadaf, specifically, let's talk about Muthoot, right? I wanted to understand what your current borrowing mix is. And after this measure, how much incremental funding will come from banks specifically? And what exactly would be the impact on your cost of funds?
If you talk about Muthoot Microfin, almost 70% of our borrowing comes from bank, around 50% in the format of term loans, and another 20% in the form of structured products, which is direct assignments and securitization. Balance 30% comes from various diverse assets, like we do NCDs and we do ECBs and other formats of borrowing. So it has a significant impact on our borrowing mix. Our cost of fund has been coming down consequently every quarter. And definitely as the risk weights have been reduced, plus I think there is a rate cut also that was announced recently. I think both put together 25 bips of rate cut and this 25% risk rate reduction would definitely result in ease in our cost of borrowing. We are incrementally, our cost of borrowing is around 10.3%. We anticipate that to at least go down to around 10.25 to 10.2%.
Okay. Could you broadly quantify to us is that what is the relationship between gold prices and gold lending? I mean, if prices go higher, obviously the collateral value goes higher, but will that lead to some kind of an uptick?
I don't handle the gold business, but I can tell you this, that gold has a very direct relationship with the gold prices. So generally the LTV that is managed by us is around 70 to 65% of the gold value. If the gold value goes up, definitely you have more collateral to lend against that. Definitely there is more scope of lending. But we always kind of be a little bit more calibrated. There is no increase in LTV in direct proportion to the increase in gold prices. We look at markets which are more conducive to that kind of lending, like, for example, southern markets, Kerala, Tamil Nadu, where the quality of the asset, the gold is much superior. So there we take a higher LTV, and other places we take a conservative approach. So to answer to you, definitely there would be an impact, and there would be more portfolio that can be originated, but it'll be not direct proportionate to the increase in gold prices, but calibrated approach.
Microfinance business, which is what you handle, now if liquidity comes back, availability goes up. Availability goes up means the cost should come down. So could we incrementally see that microfinance rates, which are at a premium to the underlying rates because of the risk associated with it, that also should start coming down now?
Absolutely. So we adopt a strategy of maintaining a margin between 12.75% to 13%. Currently, we are operating at 13.07. So we would definitely pass on the benefit of rate reduction to our customers. So I anticipate between 20 to 25 bips reduction for our borrowers in the coming quarter.
The thing I wanted to talk about, and a little away from this news, of course, is what's happening on your collection efficiencies right now, given the environment.
I think there is a positive uptick in the collection efficiency, barring Karnataka. Karnataka, as you guys must have been aware, that there is a legislation that has been passed in the Karnataka Assembly, which impacts the collection. But I think if you look at positively, I think that legislation is, in the long run, is in the interest of microfinance entities because it bans the activity of the unregulated entities. So if unregulated entities are stopped, then of course the over leveraging of the client, which is there unnecessarily, and the coercive collection practices, which will go away. And the microfinance company will have much more kind of areas to lend to in that area. But ex of Karnataka, if you look at rest of the locations, for example, Kerala, the collection efficiency for us is 99% on time. For Tamil Nadu is also 98% on time. I think all the other locations also which were having an impact, they are also improving every month on month. Karnataka, I think we have a limited exposure. Only around 6% of our portfolio on book is in Karnataka, which will have a marginal impact. Overall, I think the collections will definitely improve.
With respect to the disbursements, will the rate cut impact your overall disbursements? And also talk to us about what's been happening in the microfinance industry, because in the last quarterly earnings, you did highlight that because of the guardrails being introduced, there was indeed an impact there. And April 2025, one more guardrail is getting implemented. How is that expected to impact the overall industry and your disbursements?
So our disbursements are consistent. We are being cautious about the developments in the microfinance environment. So we are doing calibrated disbursements. So consistently, quarter on quarter, we are disbursing around 2,000 crores of loans, which will continue. In terms of the asset quality, definitely whatever had to be written off and provided for, it has reached a peak. There would be a slight bit of increment because of the Karnataka impact temporarily. But in the long run, if you look at Q1, Q2 of the next financial year, definitely the asset quality will improve. In terms of disbursements, we will still adopt because we are almost at the end of the financial year. We are entering into March. We would be adopting a calibrated approach for this financial year. And I think post March, definitely you would see a little bit more uptake in the disbursements. I think the overall environment is also improving. We are seeing a lot of traction at the bottom of the pyramid. The agricultural activity is improving. The Kharif crop has been good. The Rabi crop has been, the sowing has been very good. The reservoirs all across the country are filled with water. So we think that rural economy will do better. And definitely that will generate more demand of loans. And I think with the responsible approach, where we have capped the lending in terms of 4 lenders and progressively moving to 3 lenders, I think that will create a healthy lending environment. As a lender, Muthoot is well placed because if you look at our unique borrowers are increasing quarter on quarter. Almost 1/3 of our borrowers out of the 3.4 million customer are absolutely unique. There is no other lender to those. Those customers definitely we can lend. And another 20% of our borrowers only has us and another relationship. So 50% of our customers are between us and one more lender. So we don't have a problem with additional guardrails getting implemented.
So suffice to say that MFI as a sector may have bottomed out, or at least on the brink of.
Yes, I think it is almost bottom out. I think in March you would see most of the companies take whatever provision is required to deal with this situation and write off assets. So I think Q4 would be the end of this whole, and the Q1 would see positive traction. Usually Q1 is a slightly slower quarter. So disbursement might not go so rapidly, but otherwise I think the asset quality improvement you would start seeing from Q1.
All right. Really appreciate your time and glad you could join us.
If you like this video, then like, share and subscribe to ET Now.